we're going to do a backtesting session to a random pair and random time so you can follow my thought process. So in order to do a proper backtesting, I'm going to select a random pair from the list here. There are 20 pairs, so I'm going to pick a random number from the random number generator from Google. 1 to 20, generate, number 1. Okay, what is number 1? NCD JPY. Okay, let's use NCD JPY. I'm going to shrink everything so I don't see what's on the left. Move to the left randomly and start backtesting at a random moment. Boom, there we go. So I'm going to start with the monthly chart and try to guess correctly the daily directional bias and take trades aligned with that daily directional bias. So what do we see here on the daily chart? We can clearly see that price is on a bearish trend because price has broken to the downside, and then when it came back to test the origin, it failed to go higher, and now we are moving lower. However, as we know, this is Forex, this is not an index or stock. In spite of being on a downtrend, it's very unlikely that price is going to go underneath this low for a long period of time. So basically, we are anticipating a consolidation within the range before it breaks out again. So what do we see inside of this range? The most recent one is that we are on a bullish move to the upside. We had a bullish break on market structure after reaccumulation here on the monthly. So we could say that the origin of this break was down here. Okay, the upswing was this one. So basically price is trapped within this low and this high. And now that price is touching a higher time frame level here, we had a retracement. This retracement originated a move to the downside that broke the structure. Again, we had a distribution here, break on market structure. And the origin of this break was up here and the low was created here. Since that happened, we can see we made a pullback to test this order book, the main order book, this one that grabbed liquidity above this high and then originated a break. This order book was tested 1, 2, 3 times and now price is pushing lower. So now what's going on here? We can see a price is touching this reaccumulation that was broken and mitigated only once here. Okay. After this mitigation, price failed to move higher, so hence price was going lower, now into a deep discount level of this reaccumulation. What is the problem here? The problem is that from this accumulation, in spite of being on a distribution, on a downtrend here, making lower lows and lower highs, from this reaccumulation we can expect a pullback or retracement, or even a change of direction, since this was the origin of a bullish break to the upside. So within this range, we have to select the main order book, which in my eyes is this one. We can clearly see this was a liquidity grab, and since then price failed to make a lower low and broke the structure. So this is the clear level where smart money accumulated orders. Now that we touched that order book, now price is trying to push higher. So what I would say is that the target for this up move is likely going to be this high, because if we are on a downtrend on this lower time frame, okay, like this, and we are hitting a higher time frame bullish trend, which is this one, let's change the color, it makes sense that all these highs are going to be seen as internal range liquidity. Internal of what range? From this low to this high. So now we know that the target for any move on the monthly is likely to be this one. Okay. In order for this to happen, we always need a lower time frame break on market structure happening here. That probably we already had that on the daily probably. So let's jump into the weekly. Oh, what happened? Bar replay can't be connected. What's going on here? Okay, we are good now. So now that price is making this move to the upside on the weekly, obviously price is facing the last lower high on the monthly, which is this one, and some pullbacks might be produced from here. What do we see here on the weekly? We can see we had an accumulation that was broken. Price never came back to test it. So maybe we can expect a retracement into this level to happen. In that case, what we want to see, this retracement should happen from here, since this was the last lower high. However, what could happen is that price continues going higher and breaks. So let's say that we break the structure, the last pullback that created here, that could be a potential higher low on the weekly, then we can frame a trade area within this range. But for now, the bias would be to stop hand this low, fill this void, and then continue going higher. Okay, so let's mark this level on the weekly from this high to this low, and well, we can mark this as internal range liquidity for now, since this was the last higher high. Okay, well, actually this is not internal would be these lows. But let's go to a daily. Okay, it's taking long. Okay, there we go. Now we are on the daily chart. What do we see on the daily? We had a nice consolidation here. Price tried to go higher. For now, it's failing to break through this order block that we have here. We build equal highs here. Okay, you can see clearly we are building equal highs. Price is coming from, on the daily, from this low, and this low is part of a void that was left here and filled. You can see we have a tiny little void that was filled, and now price is trying to push higher. So based on this, what is our daily directional bias? Well, if we are coming from a bullish move on the weekly, on the monthly we are still bearish, but we are anticipating a move higher because of the fact that we are hitting a higher time frame level. And we see on the daily that we come from a consolidation where some money took its time to accumulate orders, and now after hitting an order block, a bearish order block, we had an attempt to go lower but failed because we have a void, and now we have equal highs. So what is the next logical move for price? To continue pushing higher. So the daily directional bias is to go higher to target these highs here. Okay, you can see here that price is starting to respect the lows over and over again. I talked about this on my previous video. So let's say that we don't care about the RR and we don't care about anything at all about the RR. The trade we could take is this one. A buy here, stop loss there, take profit there. Obviously this is not the idea, but this trade is likely going to work, and it's likely going to work because of all the things that we mentioned earlier. What we want to do now is look onto lower time frames. Let's go to a 1 hour and see what's going on here. What do we have? We have here a consolidation here on the top, and now price is trying to break out of that consolidation. We had equal lows here, equal highs, and we have all these equal highs as well. And well, let's see, we have all this consolidation. Price has attacked the sell side liquidity over and over again, trying to push higher. This is the first attempt on going higher, failed to break this high, but after a tiny retracement, price pushed back up again, and now is successfully breaking out of this high, which is part of this entire accumulation. So what we can do now that we identified this as a target, these highs here, is we can take a trade on the 1 hour. If we want to use the 1 hour, that's okay, only just for the sake of this explanation. We know that the target is likely going to be these equal highs, and we can see here the price failed to go lower on this particular candle that we are currently in, respected this low, and now is pushing higher. This low is obviously an order block since it grabbed liquidity on the sell side and produced a break on market structure. So what we are going to do is take a trade based on this order block, because the idea for the coming day would be an expansion to the upside. Actually, this daily candle is not over yet, because we opened the replay mode at the middle of the day. But well, looking at the lower time frame structure, we can take this trade like that. We can refine it a little bit more. So let's go to a 50-minute chart and see what's going on. What do we see on the 50-minute chart? Price is trying to push higher. We have a tiny stop hand here, price push higher. We can see here the lows are getting respected over and over again. Here we have a stop hand, and now we are stop handing the high again. We have a void here on the 50-minute chart. So looking at the 50-minute chart, I would love to take this trade instead, filling the void partially, stop hunting this low again, and maybe a stop loss below that low, which is a test of this lower time frame order book, because we can see this particular candle grab liquidity with this wick and then was broken by this candle that was tested here. So this was the test of the order book. So I expect price to respect that level. So let's see if we can take this trade like that, if we get fill or not. Okay, now price is pushing higher. But well, you can see the directional bias is correct, since price is pushing higher with speed and magnitude towards this direction. At this stage, what I would do is go into a 1 minute chart, because at one moment price starts moving parabolically to the upside and it's difficult to take trades based on these time frames. You can, but you will miss a lot of entries. But well, let's see if we have a pullback or not to grab liquidity, because we have to understand that now price is between this low here, which is the low of the range, and this new higher high. So theoretically, all this is internal range liquidity, but we know that the target of this bullish move is going to be these equal highs, ideally. So because of that, we can identify the swing points, which are this one, well, actually not this one, like that. So we are on this bullish trend, and the target is this one. The target wasn't met, so we can expect this to happen, maybe this pullback, testing this level and then continuing higher. So if it happens, we can take a trade. Otherwise, we miss the entry. So let's see what's going on here. This looks like a distribution array, preliminary supply, buying climax, automatic rally. So I'm going to annotate that. Preliminary supply, buying climax, automatic rally. Oops. Uptrust. This distribution could turn into a reaccumulation. That's what I would love to see, since we are looking for a higher price to be met, this one. Well, let's see what's going on here. Maybe part of this distribution is going to take out these highs, the uptrust distribution, and then breaking lower. In that case, I will look for shorts maybe. But well, let's see what happens here. Okay, we can see our price is now stop hunting the lows. That's what we wanted to see for price to continue higher, since we were looking at a reaccumulation ideally. Let's see if we can get to this level. If we break this structure, we can clearly see we are on a downtrend on the lower time frame, like that. If we break this structure, then we consider taking long. Okay, we broke the structure. We left behind this massive void, this order block or consolidation. So what I'm going to do to avoid missing the trade is measure 50% of this void. You can see I'm taking into consideration the close of this candle instead of the wick here, since this is the original void that was created up to this level, and now it is getting filled. So what I'm going to do now is take a long from here, stop loss there, and take profits at the equal highs. Actually, I don't like having low RR trades, so I'm going to move it using this new information here. Okay, let's see if this one works. Obviously, on lower time frames, you can refine it over and over again and take bigger or higher RR trades. But well, let's see what happens. What I don't like about this is that this could be a sign of strength here of this reaccumulation, and now we might have a spring going below this low. That's the only thing I don't like about this trade, because from the structural point of view, obviously this is a break mark structure. But okay, since this looks like a redistribution rather that was just broken, and this doesn't look like an accumulation, we don't have a change of character, I will take this trade. I will consider this to be a normal break market structure. Let's see if it works or not, or maybe we don't get fill at all. Okay, we didn't get fill. That's painful. Okay, we didn't get fill on these trades. We were very close to getting filled, but that's okay. Not every trade is going to be a good trade, or not every day is going to be a tradable day. Sometimes this happens when you try to refine it as much as possible. And I'll show you how could you have entered this trade. Remember at the beginning, I told you that on the daily we could have opened a buy at market structure with a stop loss down there and the take profit here. The daily buy was beautiful, correct? Another way of entering this trade with lower RR is waiting for the breaks. You see here I'm taking trades after break of market structure. So for example, on this very first break that we had here, where I tried to open a long on the retracement that didn't come, well, what I could have done is taking a long position after the break here, stop loss right there, and let it ride right there at market execution. Here I could have taken a long from here, stop loss down there, and then continue riding the trade. Oops, right at the break of market structure. Actually, the break was down here. So you can see that in spite of not having the best RR in the world, you avoid missing these trades. This sometimes is going to happen when you have parabolic moves, because it's happening based on a higher time frame level, monthly and weekly in this case. These type of things on the lower time frames will happen. So you have to understand that and play with it. Two ways of playing with this is entering at lower time frame structures. For example, here we probably had a lower time frame accumulation. You could have entering of this reaccumulation, or having big stop losses like this one and entering at the break of market structure. Well, you can see if we go back to the daily directional bias was correct. We anticipated price to go higher and it played out beautifully. So well, unfortunately we didn't take any trade, but I think this is more than enough for you to understand how to properly do it. And remember, if you haven't watched the previous video on how to properly apply this, you can watch it and learn from that. And obviously you can keep the guidelines next to your chart so you can actually follow them, and in order to avoid missing the trades or to avoid taking bad trades basically. And now the moment you have been all waiting for. These are the winners for the 4 one-on-ones. We did a live on Instagram past Friday, and here you're going to see a recording of that live. If you are one of the winners, please contact me on Telegram, Instagram or Discord, or also my Gmail. You can find any of those links in the description of these videos. Get the YouTube comments and let's see who are the winners. We have 190 unique comments, including that hashtag. So let's select the first random comment and see who is the winner. Okay, this is the first winner. So if you are right here in the live live, you can send me a message. Otherwise, we are going to be updating this on the YouTube video, on my next YouTube video, so you can contact me then. So this is the first winner. I'm going to, I don't want to miss so I'm going to open it here, see if this works. Okay, I have the name here, perfect. Now let's select another one, another winner. See who is the next lucky guy. Okay, this is the next winners, Michael Slam. So let's open it here. Now the third one, let's see who is the third one. Dun, 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 dun. This one, okay. And the last one, let's see. Big Pisha, okay. Thank you very much for watching. Don't forget to subscribe and like, and see you in the next one.